Rates have cooled a little, but not nearly enough. In the next 6 to 7 minutes, you'll hear 3 reasons why refinancing right now could save you 5 figures. And the last reason is the one that 90% of Canadian homeowners miss. Paying the bank less sounds good to you? Then tap like and hit subscribe so you never miss a money-saving play. Hi, I'm Aleem from The Mortgage Specialist. Everything here is general info. Talk to a qualified advisor before making any final decisions. Reason number 1 for why you might want to refi right now is your rate is at least a full % above today's best. As of late May 2025, we are seeing quotes of 5-year fixed refinance rates in the low to mid 4% range. That's if you take a fixed rate. Some are even as low as 4.15. Variable discounts aren't as great, but there's a strategy around that, and some people are still going for variable. Jason and Sarah in Coquitlam were locked in at 5.99. Moving to a 4.49 on a $500,000 balance saves about $60 per every $100,000 that you owe every single month. Roughly, that translates to $36,000 in savings over 5 years. But what about the break fee? For most fixed rate loans, the penalty is the greater of 3 months interest or the IRD, the interest rate differential. On Jason and Sarah's mortgage, the fee was $9,800. So they still clear roughly $26,000 in net savings, even if you include the break fees and the reset costs. With a variable rate, you're often looking at just 3 months of interest for the penalty. In this scenario with the same mortgage balance, that's about $2,500 in penalty. The rule of thumb is that if your new rate, it's below 1% of your current rate that you've got, and you have 3 or more years left on your term, the odds are that the math is going to favor a refinance. Reason number 2, you've built up at least 20% equity. Once your loan to value, LTV, dips below 80%, you can then refinance back up to 80%, that mark, and pull the difference out. For example, home values of about $850,000, the mortgage balance is $450,000, 80% of that is $680,000. That's $200,000 in accessible equity. Now, what can you do with that equity? Well, one, you could either build or renovate a basement suite and get rent of $1,600 a month. That would pay for itself. 2 is you could put 20% down on a rental. You could be leveraging equity to diversify your wealth. That's just one option. There's a few other things that you could do with it in terms of leveraging. 3, you could have a debt snowball. You could roll your car loans, student loans on looming tuition bill into one ultra low payment. You could open a HELOC instead, but the rate would be prime plus. Now, a straight refinance, especially right now, if you're taking a fixed rate, you'd be between 4 and 5% on the fixed side, which might make sense if you have some specific debts to pay off and you want a specific payment and amortization set up. The HELOC, though, may also make sense for you if you want to use some sorts of strategies like cash damming and debt swap. We will cover these and more strategies in some later videos. Reason number 3. High interest debt is dragging you down. Any balance on credit cards or unsecured lines of $15,000 or more, that 19 to 24%, it's a wealth killer. Interest alone is $325 plus per month. If you roll that debt into a sub 5% refinance, it will drop your interest to about $83 per month. You free up $240 per month. You could accelerate your mortgage payments, put them towards principal, which would shave years off of your amortization. You could seed an RSP or a TFSA and grab tax deductions. You could create a safety fund so you never have to use that high interest plastic again. The side benefit is you have one payment instead of half a dozen, which most clients will say just from an energetic and headspace point, it lowers financial stress instantly. A quick recap. If your interest rate is a full point too high, you've crossed the 20% equity threshold, or you're carrying $15,000 more in expensive debt, if any of those sound like you, refinancing now is a no-brainer. What to do next? Download the free refi readiness checklist. You'll get penalty math, docs that you're going to need, and a one-pager comparison. You can also DM refi on Instagram at The Mortgage Specialist and tell me what your current rate is and give me some information, and I'll send you back some quick estimates. Or you can book a 15-minute call with the link underneath, and I'll run the numbers for you personally. Coming up next week, hit subscribe and the bell notification, because I'm going to be going over the debt swap strategy, which talks about swapping out non-deductible mortgage interest for deductible mortgage interest, which will create a yearly tax refund, which is basically worth another extra paycheck. Tune in for this strategy. We'll see you there.